Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today, we're going to be looking at my top scanners that look for stocks that can go potentially over 1,000%. If you are new to my channel, I look for stocks that have the potential to go from micro cap to small to mid to large and beyond. So really quickly, I don't know if you've heard of the stock NVDA. But I was in this one at $1.03 back in 2016. And you can see my multiple posts here just talking about NVDA and that position. It's up over 10,468% since then. The stock has gone a lot higher than where it is today, but that's just one. I have several others. Another one that is relatively newer in the grand scheme of things. This was back in 2018 when ticker symbol APPS went from $1.40 to $102. Again, insane, about a multi-1,000% stock. Now you're wondering, how do you find those stocks, dude? Well, I'm going to go ahead and show you all of my screeners so that you can take a look and save these for yourself, and we'll talk about all of them. So consider subscribing and take screenshots as we go. So the first one we're going to look at is my most recent ELF scan. This one is looking at ticker symbol ELF. This stock went from the low 10s to over $196. So you do the math there. But this is to find stocks similar to ELF when it went from $22 to $196. So take a screenshot. It does produce 15 stocks here. Again, what you're going to want to do is you're going to want to review these stocks, look at institution and hedge fund activity, review the CEO, look at the long-term chart, look at the industry. Is it an industry that will continue to thrive or exist in the future? So we have like credit services, biotech, household personal products, and software. I mean, all of these sound decent. You do the research, you let me know. There is pollution and treatment controls. I mean, pollution is only getting worse, isn't it? I don't know. Okay, so this is my ELF 2000% scan. This is my Apple scan when Apple was $16 pre-split, meaning if you would have bought Apple at $16, this is what the financial metrics would have looked like. And I just realized my head is in the way, so give me 1 second. Okay, that's a fine spot. All right. Again, all of these metrics are looking at Apple when it was $16. This produces one company. We might as well take a look at it, right? We might as well. Could this stock move similar to what Apple did? You never know. There will be a lot of phonies out there. So is this a phony? All right. They produce a high dividend. They have positive sales, positive EPS. Price to earnings is 6.74. That means this stock is very cheap. Did we just find a really good stock together on accident? Maybe. I need the purpose of this video isn't to review stocks, so I just need to note this one down because you never know. You never know. This is DSX. And then do they do offering or splits? Let's just see. Offering. They haven't done an offering. All right, so it doesn't look like they are crapping on their shareholders. I do like this company, but that's beside the point. Again, if you would have bought Apple at $16, Apple's now trading at like $170, so that's a 10x right there. Missed 200% scan. So this one isn't really necessarily a 1,000% stock, but this is a good one. I reviewed a stock that had gone basically 200% under the radar. It never went on any of my scanners. It never appeared on StockTwits or Reddit or CNBC. It just kicked butt behind the scenes, which is why not? Like that's amazing. So here's some companies. Here is the screen if you want to take a picture of it. All right, we have our dividend growth screener here, but this is for people who want income and want solid companies. This isn't really the purpose of that, but I'm showing you all my scanners, so might as well just show you. So this isn't for like the 10x or 1000% stocks. This is more of higher float dividend yielding companies. And this is a very broad. So these are dividend stocks that have had positive growth for 5 years in a row. They have high gross margins. They have 2% plus dividend percent pay. So every $100, you'll make $2. Their quick ratio is over 1, so they can pay off any debts if they close the door tomorrow. And they have a somewhat of a low float. So I consider these possibly growth dividend stocks. Iffy. So take a screenshot. Tell me what you think about this one. Looking at our small cap capitulation stocks, this will be good. So this is interesting. I don't know why I have consumer cyclical here. I would want to have this as any. I'm just going to change it to see if we get some updates here. We don't. So basically, this is a very fine-tuned scanner to find small cap stocks that are way oversold. And you can see right here, like they are just, people are throwing them in the dumpster. They don't want it. They're lighting it on fire. They would rather get rid of it than own it. That's typically when you want to buy solid companies. Let's remove the price and see if we get anything else here. Still nothing, that's fine. Operating margins are positive, low floats, quick ratio, there is some debt in there. Earnings per share growth is very high. The country is the USA. Let's just remove the USA. So again, a very, very fine-tuned scanner here. I just updated a couple things to see if we could get a hit. That's for capitulation. This is probably good for midday scanning. Like last week, there was, maybe it was Thursday or Friday, when one of the Fed people spoke and the market just tanked. That would have been a good time to run this to see if we can catch any good ones. So here is my swing scanner. So if you're wanting to get some stocks to swing for a day, week, month, whatever, the price is over the 200 SMA, so that is critical for myself. For someone who wants to be comfortable swinging, I want to see the price of the stock over the 200 SMA, meaning it's overall in a healthy state to be purchasing. We also want the stock price target. So analysts have a target. We want the price to be below that. So meaning the price is in a healthy, considerable state to swing and own, but it's also below analyst estimates, meaning there is room for it to continue to go up. It is a high growth company. The debt is low. The quick ratio is over 1. The EPS growth over the past 5 years is positive. So this stock has been consistently growing for 5 years. So it's considered a stable stock with EPS growth this year and next year positive. So consider all of those options. Here is the screener for that. All right, here is Tesla back when you could get it for a 10x price for Tesla. So market cap is very targeted. EPS growth is high. Gross margins are high. Average volume is high. Float is under 100 million. Institutional transactions are positive and the quick ratio is over 1. That is a very, very broad scanner, but look how many stocks there are. There's only 10 stocks that fit that criteria. That is absolutely crazy. And a lot of them I would definitely want to take a bit of a deeper dive into, honestly. Calix, this company went 10x. I've watched this one for a while. So this is a good one. This was the same metrics as Tesla before it had the 1000% move. The moves like ENPH got ENPH at $1. It's now trading over 100. All right, what do we have here? So the shares, excuse me, outstanding are under 100 million. Micro cap companies, very, very important. EPS growth is very freaking high. Quick ratio, there is some debt. So with these small micro cap companies, they are going to need to take on some debt to be able to grow. Long-term debt is very low. Gross margins are over 20%. I really love over 30% plus, but again, as a company is growing and scaling up, they're not going to have the amazing 30% plus at the moment. Insiders are buying positive. Institutions are buying positive. And then the target price is higher than the current price. There's only 3 stocks here that are meeting that criteria. I want to look at them, but that's not the purpose of this video. So here is my ENPH scanner. Income-based scanner. Again, this is going to be more of a dividend yielding scan. So you can see the dividend pays over 4%. EPS growth over the past 5 years has been over 5%, meaning this has been a stable stock over the past 5 years. The EPS growth is positive, and the EPS growth next year is also positive, and they don't have any long-term debt. Here are the companies that come up. I'll let you decide. I mean, again, we have stocks as high as 100. Well, let's see. $6 stocks all the way to $330 stocks that have been just kicking butt for the past 5 years. And they pay over a 4% dividend, meaning if you have $100, you're going to get $4 back. Think of it as $1 million, you're going to get $40,000 back. $10 million, you'll get $400,000. You can do the math. Again, this is an income-based scanner. Not really what I go for, but still something just to have. Value scanner, this is basically going to be our larger cap stocks that have decent volume and the target price is higher than the current price, where institutions are buying, and the EPS growth is positive with growth next year over 5%. We have tons of stocks on this one. Here's the scanner for you guys if you want to capture. Here is our growth scanner. We have a very small market cap, quick ratio, accounting for the debt. Institutional transactions are positive. The stock price is under $10. Average volume over 100,000. Gross margin over 25. Again, that's getting close to the high growth. EPS growth is positive this year and next year. We have 91 stocks. Knock yourself out. Go for the scan, review them, chart them, do what you got to do. I have a catalog with over 4,000 stocks that I do all this kind of stuff on, and then I have alerts set up. All right, so now we're getting into our more focused stocks, like we were looking at the Apple one and the ENPH one. So this is casting a wide net for gems. We have the price under $10, very high volume, very high growth, very high EPS growth with institutions buying. Again, lots of stocks to choose from, 19 stocks here. Mankind, yeah. Check these out, do your own research. Here's a scan if you want to take a picture. This is like searching for ticker symbol APPS when it was $1 and it ran to $100. Quick ratio, they had a little bit of debt. Again, debt to equity, long-term debt to equity is under 1. Gross margins are very high, 35%. The price is above the 200 SMA. Shares float was under 100 million. Average volume, 300,000. Sales growth, quarter over quarter positive, and EPS growth next year, high. 40 stocks here. We don't have apps on here, but we have other potential stocks, again, that could be in a similar, look at this one. I just happened to hover my mouse over it. Look, this is a good example of what we missed out on. This is an India-based company, so I don't really like going outside the US, but I mean, this went from $28 to now $75. They're profitable. EPS is going the right way, almost positive. Sales going up. Institutions buying. Gross margins are high. They're profitable. Very, very expensive. Very, very expensive. Again, look at that chart. Isn't that insane? Oh my goodness. See, that is why scanners are very important. I'm pissed I don't have that. Okay. So that is Digital Gold Mine. Take a screenshot. Don't get FOMO. Solid movers. So this is like an NVIDIA scan. This was scanning for NVIDIA before I had the 1000% move. Again, a very broad scan here. It's not very fine-tuned. So what you have to do as a person, you have to look and see if this is going to be a industry or sector that is going to do well in the future. So we have software, communication, pollution. Again, this is the second time we've seen pollution. But the stock is $1 for the pollution one, so very high risk. Credit services, internet content, medical devices, biotech. See, now these biotech and medical devices could be very big in the future depending on what they are. Again, this video is not to look at individual stocks. It's just looking at scans. So potential 20x stocks. I just released a video last week. Potential 20x stocks. This was built off of AMD when AMD was around $2 and it's now around 190. I did review, I think, these stocks as well. So that is the last of my scanners that I have. Let me know in the comments if you guys like these, like this type of video, if you want me to review some of these. If you made it this far, consider subscribing. Have an amazing week. I'll talk to you soon. Bye.